Malaysia, understanding the tax responsibilities of both employees and employers is crucial for compliance and financial well-being. The Income Tax Act 1967 lays out clear obligations for both parties, ensuring the tax system runs smoothly. Employees must declare their income and pay any taxes due, while employers play a vital role as tax agents, handling deductions and remittances. This video will walk you through the key duties for each side, how they interact, and what you need to remember to stay on the right side of the law. Let's begin by exploring the basics of these responsibilities. Employees in Malaysia have several important tax duties. These include registering with the tax authority, reporting all sources of employment income, filing annual tax returns, paying any outstanding tax, and keeping proper records. Each of these steps is essential to ensure compliance with the law and to avoid penalties. Let's break down each responsibility in detail, starting with registration. First step for any taxable employee is to register with the Inland Revenue Board of Malaysia, known as LHDN. This process involves obtaining a tax reference number, which is essential for all future tax dealings. Registration ensures that your income is properly tracked and that you can fulfill your tax obligations. It's a straightforward process, but it's the foundation for all other tax responsibilities. Without registration, you won't be able to file returns or make payment. Employees must declare all forms of employment income. This includes not just your basic salary, but also wages, bonuses, allowances, and even benefits in kind like a company car or housing. Overtime, commissions, tips, and gratuities must also be reported. Being thorough in your income declaration is vital, as underreporting can lead to audits or penalties. Make sure to keep track of every source of income you receive from your employer. Every year, employees must submit their tax returns, typically using Form BE or B. This process involves declaring your total income for the year and claiming any personal reliefs, rebates, or approved donations. Filing your tax return accurately and on time is essential to avoid penalties. It also allows you to maximize your eligible deductions, potentially reducing your tax burden. Always double-check your forms before submission. After accounting for any tax already deducted through the monthly tax deduction (MTD PCB) system, employees must pay any remaining balance. Timely payment is crucial to avoid penalties and interest charges. The tax authority provides several payment options, making it easier for employees to settle their dues. Always check your tax calculation to ensure you're paying the correct amount. Employees are required to keep salary slips, EA forms, and all supporting documents for at least 7 years. These records are essential in case of an audit or verification by the tax authority. Good record keeping not only helps you stay organized, but also protects you if any questions arise about your tax filings. Make it a habit to store all relevant documents safely each year. Employers in Malaysia have their own set of tax responsibilities. They act as tax agents for their employees, handling monthly deductions, remitting taxes, issuing EA forms, and maintaining records. Employers must ensure accuracy and timeliness in all these tasks to avoid penalties and ensure compliance with the law. Let's look at each employer responsibility in detail, starting with the monthly tax deduction. Employers are required to deduct the monthly tax deduction, also known as MTD or PCB, from their employees' salaries. This deduction is calculated according to guidelines provided by the tax authority. The purpose is to ensure that employees' taxes are prepaid throughout the year, reducing the risk of large tax bills at year-end. Employers must be diligent in calculating the correct amount for each employee. Once the tax is deducted, employers must remit the collected amount to LHDN every month. Timely and accurate remittance is crucial to avoid penalties and maintain compliance. Employers should set up reliable processes to ensure that payments are made on time and that all records are properly maintained. This step is a key part of the employer's role as a tax agent. At the end of each year, employers must provide employees with EA forms. These forms summarize the total income earned, tax deducted, and any benefits in kind received during the year. The EA form is essential for employees when filing their tax returns. Employers should ensure that these forms are accurate and distributed on time to help employees meet their own tax obligations. Employers must maintain detailed records of employment, payroll, and tax deductions for at least 7 years. These records are vital for compliance checks and audits by the tax authority. Proper record keeping not only helps employers stay organized, but also demonstrates their commitment to legal compliance. It's important to have a reliable system for storing and retrieving these documents when needed. Employers must ensure that all tax calculations and remittances are accurate and timely. They are also responsible for informing the tax authority about any changes in employment status, such as new hires, resignations, or terminations. Staying compliant helps avoid legal issues and penalties, and it builds trust with both employees and the authorities. Let's compare the responsibilities of employees and employers. Employees must register, declare income, file returns, pay tax, and keep records. Employers, on the other hand, deduct and remit tax, issue EA forms, maintain records, and ensure compliance. Both parties play a crucial role in the tax system, and their duties often overlap, especially when it comes to documentation and compliance. Both employees and employers have registration duties. Employees must register with LHDN to obtain a tax reference number, while employers must ensure their business and payroll systems are registered and compliant. This dual registration ensures that all tax activities are properly tracked and managed by the authorities. Employees are responsible for declaring their total income, while employers must deduct the appropriate amount of tax from salaries. This interaction ensures that taxes are collected efficiently and that both parties fulfill their legal obligations. Accurate income declaration and deduction are key to a smooth tax process. Employees must file their annual tax returns, while employers are responsible for remitting the deducted tax to LHDN. This coordinated effort helps maintain the integrity of the tax system and ensures that all taxes are accounted for. Both steps must be completed accurately and on time to avoid issues. Both employees and employers are required to maintain proper records for at least 7 years. This includes salary slips, EA forms, payroll records, and tax deduction documents. Good record keeping is essential for audits, compliance checks, and resolving any disputes that may arise. Monthly Tax Deduction (MTD) PCB system is designed to ensure that employees' taxes are prepaid throughout the year. Employers deduct tax from salaries each month and remit it to the tax authority. This system helps employees avoid large tax bills at year-end and keeps the tax process running smoothly for everyone involved. Proper documentation is the backbone of tax compliance. Both employees and employers must keep all relevant documents such as salary slips, EA forms, and payment records. These documents are crucial for audits, resolving disputes, and proving compliance with tax laws. Never underestimate the importance of good record keeping. Failure to comply with tax responsibilities can lead to serious consequences, including penalties, fines, or even legal action under the Income Tax Act 1967. Both employees and employers must take their duties seriously to avoid these outcomes. Staying informed and organized is the best way to ensure compliance and peace of mind.